The Nifty is absolutely flat, now gravitating towards red terrain. Unfortunately, there's not too much of a recovery that we're seeing in the market.
At this point in time, we do have the mid-cap index, which is down around 0.3%.
Extreme caution prevails after yesterday's big slide. That range that we've seen is about 150 points on the benchmark index. We are going to go home with a loss of about 25 to 30 odd points, 35 points actually, on the Nifty. Mid-cap index is absolutely flat.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Sensex and Nifty declined for the 5th straight session, marking the longest losing streak in 8 months. Sensex loses over 130 points. More than 7 lakh crore rupees in investor wealth has been wiped out in the last 5 sessions. Zee Entertainment slides over 5% as NCLT admits IndusInd Bank's insolvency plea against the company. Street fears the move may throw off or delay the impending merger with Sony. The company maintains Zee will take all required steps to ensure timely completion of the merger and has also filed with the NCLT. Sonata Software acquires Texas-based Quant Systems for over 1,300 crore rupees, its biggest ever acquisition. The deal includes an upfront payment of 540 crore rupees. The stock surges over 5% as Quant is likely to add 2 new clients to Sonata's top 5 client tally. Mahindra CIE gains on the back of a strong December quarter performance, while positive brokerage commentary helps Gail surge close to 3%. Crude oil extends losses to second week on recession fears and more aggressive rate hikes. Further rise in US inventory also puts pressure on prices. Here's the lineup of what we have in store for you. It's a packed show today. We'll get you expert opinion from Dheeraj Agrawal of Ambit Capital and Rupal Agrawal of Bernstein. In Corporate Voices, we have Sameer Dheer, who's the MD and CEO of Sonata Software, and Siddharth Mishra, CMD of Bhara Dynamics. Okay, it was the volatile day that saw Dalal Street close the session flat. Markets fell for the 5th straight day, posting its biggest losing streak since June 2022. Nifty and Sensex failed to hold on to intraday gains to end mildly in the red. The broader markets fared slightly better than the blue chips. BSE companies have raised a market capitalization of over 7 lakh crore rupees in last 5 sessions. For this series, Nifty lost 2% to record its biggest fall in a series since September. Surbhi Upadhyay is here with the day's trading action. Surbhi?
Well, this is a market that seems to be in no man's land. Nothing is moving it. The bulls will, however, see this as a sign of relief, considering the huge drubbing that we saw yesterday in trade. Today was a very cautious session right from the word go. The market was trading in a very narrow 120 to about 150 point trading band. We did have the monthly expiry played out, so there was some volatility around 3 o'clock, but net result is that we've closed at the flat line with absolutely no sense of direction whatsoever. The talking points continue to be the same, direction of interest rates and whether the RBI will hike again in April, what the Fed is doing, rising bond yields in India and obviously internationally, and that's really keeping a lid on momentum. Let me quickly come down to today's movers and shakers. So there was some shine in the metal side of the market, actually metals and commodities. So you had stocks like Hindalco, Tata Steel, a little bit of green on an ONGC for that matter during the course of the day. So some of these names were active. Then you had a couple of the banks that started to come back in towards the close of the session, and that prevented a wider fall. So names like Axis Bank, SBI, Kotak Mahindra Bank, they pretty much sort of held the floor for the market, if I could say that. And then there was, of course, the stock that has been the star of 2023 after being the star of 2022, and I'm talking about ITC. Lifetime highs today for the stock. Once again, it's inching closer to the 400 mark, and that gave some respite to the bulls. But then pressure on the other side. The trends are very unclear, and a lot of the heavier stocks like Reliance, HDFC Bank, they continue to see selling pressure today, and there was not much clarity. Broader markets, well, really it's extremely stock specific in terms of the action. For instance, a Sonata Software today, where the company's gone ahead and done an acquisition, that was in focus. Zee was in focus because of all the ongoings at the NCLT in the company, then challenging that at the NCLAT. Stock was down 15% at one point in time, but then closed with a cut of just about 3 to 4%. So it's extremely stock specific. There isn't a momentum play in this market. And for what it's worth, I mean, the market's really searching for triggers and a sense of direction that doesn't seem to be coming right now.
Surbhi, thank you so much for all those details. Moving on to some market opinion now. Dheeraj Agrawal of Ambit Capital says that the market is likely to remain range-bound for a while longer. He also adds that the valuation of banking stocks like Axis and SBI look reasonable currently.
the market's likely to be range bound for quite some time to come. I think most of this year for sure, maybe even longer, who knows. I compared the current market phase with what happened between 2010 to 14. If you actually go back and look at that period, no themes worked, but bottom-up stock picking worked. I think we are back to that phase. Banking is seeing or will see and hence will price in some amount of margin pressure. In few cases, it might already have been priced in. So both Axis and SBI on valuations now look fairly reasonable. Can be looked at the current prices, yes.
Okay, that's some expert opinion coming in. To the second headline now, Zee Entertainment has moved the NCLT seeking a stay on insolvency proceedings. Yesterday, the NCLT, on the back of IndusInd Bank's plea, allowed initiation of insolvency proceedings against the media company. Lata Venkatesh joins us now. Lata, what could this mean for the company's proposed merger with Sony, and what do legal experts have to say about this?
The company Zee Entertainment had no option but to go to NCLAT because the NCLT process has to be stopped. They have to get a stay. If the NCLT process runs, then the promoters and the management are taken off and a committee of creditors will take over the company, which obviously they don't want because they have to run the company and conduct the merger. Now, what are the chances that Zee will get a stay? The chances, according to legal sources, is good because the loan in dispute is not something that Zee has taken from IndusInd. Apparently, what Zee has done is, Zee is itself almost debt-free. It has given a comfort to IndusInd in a loan it has given to its old group company, City Network. And the loan, in technical language, arrangement is called Debt Service Reserve Account. And apparently, the comfort that Zee gave was that it will always ensure that in that account, 1 quarter's interest and principal is maintained. But then City Network became an NP. It defaulted. And now IndusInd is asking Zee to pay up that money because it gave that comfort letter. It is seeing it as a guarantor. Zee has taken IndusInd to the Delhi High Court where it is fighting that case. So chances are Zee will tell NCLAT that this is actually a loan in dispute that IndusInd is trying to take from them, and therefore this NCLT petition should be quashed. Now, does NCLAT have the right? There are precedents that NCLAT can take such a view. The Supreme Court in the Vidarbha Industries case had said that NCLAT can, or for that matter even NCLT, can decide whether to admit a case or not on the merits of the case. And here Zee has a good chance of saying that this is a bad case in the first place. The other things that apparently Zee can bring forth is that the claim was made by IndusInd during COVID. And at that time, many of those cases were not allowed because of the COVID period. So the case is not even maintainable. Zee can also argue that when NCLT pronounced the judgment, it had not allowed Zee to make a case. It had only taken written submission, not entertained them in person, and therefore procedure was not followed. According to legal, Zee has a good chance of getting a stay, but until the stay comes, you can't be sure.
Lata, thank you so much for making sense of what's happening with Zee Entertainment right now. Moving on to the third headline now. Sonata Software acquires Texas-based Quant Systems for over 1,300 crore rupees, biggest ever acquisition for the company. The deal includes an upfront payment of 540 crore rupees and the stock gains over 5% as Quant is likely to add 2 new clients to Sonata's top 5 client tally. Mangla Malu is standing by with the details. Mangla.
Well, it's the biggest acquisition that Sonata Software has made. They've gone ahead and acquired Quant Systems Inc., which is a Texas-based IT services corporation. Now, it is big primarily on account of the size that they are paying to acquire it. Upfront payment of $65 million plus additional payment of $95 million over the next 2 years based on some achievements and additional target-based payments as well. So these are some things that we'll have to monitor primarily because the scalability is important out here. The company has done almost $37 million worth revenue in CY22, which is a very small amount compared to the company's own Q3 revenues of nearly 2,300 odd crores. They've, relinquished their entire cash on the books on this upfront payment. The cash on their books was close to around 600 odd crores. So the margins and scalability is something that we'll have to monitor. The stock has rallied 14% in Feb so far. Let's see where it goes after this acquisition and whether the street considers it to be an overpayment for a company.
Quant is a growth acquisition. This is all about growth and accelerating growth for Sonata. It's one of the largest acquisition. In fact, it is the largest acquisition for Sonata to date. What it brings to us is really three things. Number one, we've talked about diversifying a business into healthcare, life sciences, and banking and financial services. So the clients that they have really give us a very solid footing into the healthcare, life sciences, and banking financial services industry. The second is their clients will break into top 5 of our clients. So 2 of their clients will break into top 5 of Sonata, 1 banking client and 1 healthcare client. It's been a creative acquisition from a margin profile perspective. It's not surprising because they are in a niche area, and it's a niche area which is fast growing. There isn't a conversation in the cloud space today which is devoid of data privacy, cybersecurity, enterprise data. So they're really in the heart of the action from a Fortune 500 perspective. So yes, it is a creative from a Sonata perspective. Like I said, they are about mid-30s EBITDA. So it's accretive. And we think that that momentum will continue even as we invest back in this business to further accelerate the growth. We believe that quant will contribute an accretive investment from an EBITDA perspective.
That is, Sonata Software closed high by 5.5% in a very choppy market. Time for a break now. Stay tuned. We'll be back in a bit with all the other headlines that we are tracking for you. Hello and welcome back to Markets Today. Let's move on to the rest of the headlines now. The fourth headline now. Gail India was buzzing in trade today after a positive note coming in from CLSA, where they actually increased the target price on the stock as well to 125 rupees per share versus 110 earlier. They maintain a buy rating on the stock. There are a couple of triggers that CLSA has spoken about for Gail, and the first one is that they're expecting tariff hikes for the company by around 40%, and that is the reason why they've upgraded their EPS estimates by 14% as well. So Gail earlier had proposed integrated tariff hikes, and this is across their transmission pipelines. They had proposed it to PNGRB, and PNGRB came back with some of the suggestions. Of course, they're not going to hike 70% tariffs is what PNGRB says, but CLSA believes that even if we take into account the recommendations of PNGRB, tariff hike could be around 50%, and that is a big positive for Gail. They expect the final announcement to come in by mid-March, and that is because they have an open house, PNGRB, that is on 6th of March itself, where they will be discussing this proposal. Additionally, there are more commentary and more positive takeaways from this note. They're talking about the utility part of the business, which is more stable business, which has better margins as well. That is contributing around 58% of EBITDA now versus a lower share earlier. And the cyclical or the commoditized side, that is the marketing business, is just 19% of some of the parts of the target price. And 80% is coming from utility business and investment. So these are certain things which will lead to better performance as far as stock is concerned. And that's why CLSA is bullish on this counter. But let's move on. Mahindra CIE Automotive also gained after reporting a good set of numbers in the December quarter. The company saw good growth in the European business, with the EBITDA improving by 88% year-on-year and margins rising by 340 basis points. Sonia Shenoy is standing by with all those details. Sonia.
Well, thanks a lot for that. It was indeed a very good set of numbers for Mahindra CIE, and this is a stock that has doubled in the last 1 year. Now, the numbers were very strong, both overall as well as in the European business. Remember, Europe was undergoing challenges, but now the company has seen a steady recovery both in terms of auto demand as well as lower energy prices. Overall, for the business, the revenues have grown 26% at 1,342 odd crores. The EBITDA went up 93%, and the reported margins look very inflated at 18% versus 12% earlier. That's because of a one-time gain on the profit of a land sale that they did, which was to the tune of 38 odd crores. Ex of that, the EBITDA is still very strong at 15.7%. Let's move to the European business, where the management said that because the supply challenges have eased, the demand has come back and production has picked up as well. So overall, the sales went up 43%, EBITDA was up 88%, and the margins have picked up in the European business, A, because of the energy costs coming off, and B, because the extra inflation cost was passed on to the consumers due to higher demand. So all in all, good numbers from Mahindra CIE.
Okay, all right. So Mahindra CIE in focus as well. Sticking with stocks now, making news in today's trading session. Bhara Dynamics CMD Siddharth Mishra says he expects more than 10% revenue growth this fiscal itself. Also added that the company's margins have been impacted by rising research and development expenses. The stock, though, closed higher by 5% in trade today. Listen in.
See, this year we are very sure that we will surpass last year's target, and at least 10% growth will be there in our revenue from operation. So we are looking at between 3,100 to 3,200. and next year our target will be not less than 3,800 crores. See, margin we are looking more than 20%. We already in third quarter we have around 19%, and it will be more than 20% by end of this year. Margins have certainly come down, but this has come down because my R&D expenditures have gone considerably high. If you compare it from year on year, from 32 crores we have crossed R&D to 100 crores, more than 100 crores.
Okay, those are all the stocks and news, but moving on to the fifth headline now. Crude oil extends losses to second week on recession fears and more aggressive rate hikes. Further rise in US inventory also puts pressure on prices. Manisha Gupta is standing by with all the details from the crude world. Manisha.
Oh yes, this week is headed for a negative when it comes to energy as a space. If you look at the crude oil prices, overnight was a 3% decline, and for the week we are down between 5 to 8% depending on what crude variety you're watching out for. The prices also have been under pressure as we've seen China's demand still uncertain, and then all of the US data has been on the positive side, whether it has been retail sales, home sales, inflation, and that tells you that the US Fed rate hike concerns are back. The dollar index as well is trading at around 6-week highs, and that has weighed on all dollar-denominated commodities. And then the markets are watching out for the API data, which shows that the US inventories have increased for a 9th straight week, and this time around by 9.9 million barrels. The US gasoline prices also have declined by 4% to a 2-week lows in the overnight market. So not just crude, but the crude products have continued to decline. Same is the clue with the natural gas prices, where we are trading at a 29-month lows. We have seen prices break below $2 per MMBTU also. So with this kind of a decline, we are 45% down for this year and 80% down from the kind of highs that we saw in the previous year. Well, the inventories have been rising, not just in US but in Europe as well, and then the markets are looking at good production in US. The Norway outages also have been suspended now, so we have seen supplies come in from there too. So higher production, higher inventories, not such a great demand, warmer winter expectations as we are towards the fag end of it also continue to weigh into the space, with markets anticipating that there could be some more pressure as we head towards into the month of March.
Manisha, thank you so much for joining us with that analysis. Moving on, there's no respite for the Adani Group. 8 of the group's 10 listed entities ended the day in the red. Adani Total, Adani Green, Adani Transmission and Adani Power hit lower circuits over the course of the session. The group has lost market cap to the tune of 20,000 crore rupees today. This takes the total market cap losses since the Hindenburg report was released on the 24th of January to around 12 lakh crore rupees. As of today, the Adani Group's market cap stands at 7.4 lakh crore rupees. Yash is joining us as to what's happening as far as LIC's investments in Adani Group is concerned. Yash?
Well, the big headline as far as, LIC's investments are concerned is that LIC's investment in Adani Group companies have turned negative today. We've put together some interesting numbers supporting the headline, and these numbers also throw some interesting facts. Interestingly, LIC is likely to have sold Adani Group shares worth 6,400 crore rupees, which was between January 1st to January 24th. How did we reach that conclusion? Now look at the turn of events on January 27th. LIC disclosed that the value of its investments in Adani Group companies was 56,142 crore. When the same was calculated taking in consideration the December shareholding, it comes to 62,550 crore rupees. The difference is about 6,400 crore rupees, or 10% of LIC's holding in Adani Group companies, which is likely to have been sold between Jan 1st to Jan 24th. Now let's come to the point of LIC's investment in Adani Group companies turning negative. The closing value today for LIC's investment stood at 33,215 crore rupees. Adjust this to that possible 10% stake sale which LIC made in January. That will give you the number of 29,893 crore rupees. Now this compares to LIC's total cost of purchase, which was 30,127 crore rupees. So as things stand, LIC is sitting on losses of approximately 234 crore rupees on a mark-to-market basis. As I mentioned, LIC bought these stocks at 30,127 crore rupees, and its investment value as of today's market close is 29,893 crore rupees. This shows that LIC is in the red by about 234 crore rupees.
Okay, all right, Yash, thank you for joining us with that analysis. That's about the Adani Group and LIC's investment in the group as well. And with that, it's a wrap on this edition of Market Today. Thank you for watching.